Good morning, everyone. Today is Friday, the 9th of April, and I welcome you all to the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Before we begin, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties, as well as being broadcast live on Facebook. This presentation is scheduled to hold for 30 minutes, inclusive of Q&A. However, if due to time constraints, we're unable to answer all of your questions today, please feel free to email us at research@vetiva.com and we'll get back to you as quickly as possible. Today, we'll be hearing from our equity and fixed income traders and from our partners at Frontier Africa Reports, but also our team lead research will take us through our conviction stocks and their performance in March. So we'll start with Luke Ofojibe, our research team lead, who will give us a rundown of our conviction stock performance in March. Good morning, Luke.
Good morning, Joshua. Good morning, everyone. So in the month of March, our conviction stocks returned a loss of 4.1%, underperforming the ASI, which returned a loss of 1.9%. On a year-to-date basis, the conviction stocks have returned a gain of 8.1%, overperforming the ASI, which has returned a loss of 3%. So in the month of March, we saw more bearish trading in the stock market. As a result of that, we saw losses across all the sectors that make up our conviction stocks. So for instance, oil and gas was the worst performer. The sector lost 2.5%. That was mainly due to a 16% loss we saw in Adova PLC. The banking sector was also down. The sector lost 1.9%. That was mainly due to losses we saw in Zenith Bank, Access, and FCMB. The other two remaining sectors, those are consumer goods and industrial goods, were also down during the period. So because of the start of a new subsidy regime in the downstream sector, we expect to see weaker margins and weaker profitability among the oil marketers in the coming quarters. So as a result of this, we have reduced our exposure to the downstream companies and consequently increased our exposure to other companies in our conviction stocks. Also, because we are already in the month of April, we expect that companies should start releasing their Q1 results any moment from now. And for companies like Seplat and Lafarge Africa, that's WAPO, that we expect to release impressive Q1 results. We expect to see more of positive trading on these stocks when their Q1 results are released, and that should support the performance of our portfolio in the month of April. So I guess that will be all from me today. Thank you, everyone, for listening. Over to you, Joshua.
Thank you very much, Luke. Next, we'll hear from Sean Oshomo, our equity trader. Good morning, Sean.
Good morning, Joshua, and good morning, everyone. We start off with performance of in two of the major markets in West Africa. So the BRVM maintained a second consecutive day of positive close as the index gained 19 basis points. This moderated the year-to-date return to a loss of 2.43% in that market. Bichi, Serve, Abidjan, and Sucrivor all closed in the green to support the positive close. Though market activity declined in the session, we expect a positive. Though market activity declined in the session, for today we expect a positive close as investors continue to take position in some of the decent names in that market. In Ghana, the Ghana Stock Exchange Composite Index recorded a slight drop, having closed the session 14 basis points down. This was led by loss we saw in EcoBank Ghana. We saw significant trading in the shares of Cowbank continue to dominate market volume, as there was no large trade in the market like we saw in MTN Ghana in the previous session, which caused a decline of about 89% in the volume and 86% in the value of trade in trade yesterday. The year-to-date in that market, the year-to-date return of the market still remained positive at 16.1%. So back home in Nigeria, market sustained the previous session's positive close as the ASI settled at 26 basis points higher. Like we noted at our previous session, we saw investors cherry-picking names that have been beaten down in, previously, especially in the banks. The subsector, that's the banking subsector, closed up 219 basis points to lead other sectors to a positive close, apart from the consumer goods sector, which closed down 20 basis points, which was on the back of the losses we saw in the brewery space, as well as the industrial subsector, which also closed unchanged. So sectors like insurance, banks, and oil and gas all closed positive. UBA, Access Bank, GTB, and Zenith all recovered from recent losses. I think in the last 2 to 3 sessions, we've seen the banks beating down quite much. So we saw investors coming into cherry pick those sectors. And the tier 1 banking names all recovered from recent losses, while Guinness and international breweries in the brewery space pulled their sector lower. They pulled that sector lower as we saw some profit taking in Guinness and international breweries. Activity level didn't reflect much of the upward movement in the main bourse as we saw a market lacking any catalyst. Volume and value traded dropped 59 and 62% respectively in yesterday's session. So going into today, which is the last trading day of the week, we see mixed activity to the close of the week as we believe savvy investors will sustain their cherry picking in some of those sound names, especially in the banks that have been beaten down, and valuations seem to be looking positive in those counters. But generally, we expect another quiet day aside crosses as investors continue to seek cues around macroeconomic conditions before moving back into the equities market. That'll be it for the equities market. Thank you.
Thank you very much, Sean. Next, we'll hear from Omorege, our fixed income trader. Good morning, Omorege.
Good morning. Good morning, everybody. I'll start with the money market. The money market is still very liquid. Yesterday, we saw a further decline in system liquidity. As opening figures for yesterday was about 56.95 billion positive, coming from 96.78 billion positive recorded on Wednesday. During the course of the trading session, about 20 billion was debited from the system for OMO auction. So this further reduced the system liquidity, and as a result, money market rate maintained to trade between 13% to 15%. So our expectation for today is that the money market will trade at lower levels in the absence of any major shock to the system. So moving on to the FS market. So yesterday we saw a significant improvement in dollar supply to the system, and FS turnover increased by about 690% to close at $93.6 million as against $11.85 million that was recorded on Wednesday. As a result of the significant boost to FS liquidity in the system, we saw the Naira appreciate against the dollar across all official windows. It traded at a high of 419.30 Naira to a dollar, while closing at 409.65 Naira to a dollar. Despite the significant improvement in dollar liquidity, the parallel market remained stable to trade at 485 Naira to a dollar. Moving on to the T-bills market. The T-bills market traded actively yesterday. We saw some offers on the long end of the curve. However, the bid and ask spread remained very wide at about 50 basis points apart. The highlight of yesterday's trading session was the OMO auction, where the CBN offered 20 billion as against the 34 billion that matured on Tuesday. At the auction, the CBN maintained marginal rates across the 3 tenors for the opt-in time. For the short end, the total amount that was offered there was 5 billion, while the subscription was 16.75 billion, and the total amount that was sold was 5 billion. As earlier said, stop rate on that end was maintained as it closed at 7%. While for the mid end, the total amount that was offered was 5 billion. The total subscription on that end was 20.95 billion, and the total amount sold was the same as what was offered, which was 5 billion, which also maintained on that end to close at 8.5%. While for the long end, the total amount that was offered was 10 billion. The subscription on that end was 66.83 billion, and 10 billion was sold. Rate also maintained to close at 10.1%. So our expectation for today is that the T-bills market will close the week on a very active note as traders seek to offload their current holdings with the view of rates increasing in short and long-term papers. I'll conclude with the bonds market. So yesterday, the bonds market traded on a very active note. We saw offers on the long end of the curve. We saw offers at around 12.5% to 13% on the long end of the curve. We also saw offers on the mid end of the curve, but investors naturally gravitated towards the long end of the curve because of the attractive offers that were on that end. During the course of the trading session, we saw the bearishness that was witnessed during the early part of the trading session calm a bit as offers on that end shared about 10 basis points on an average. So our expectation for today is that there will be a repeat of yesterday's trading session. So we expect the market to still remain very bearish, given that system liquidity has not improved. We believe that some players should try to create liquidity by offering some of their holdings at very attractive levels. And also we believe that players will try to feed their unmet demand. So we anticipate that there will be more trade consummated today. That will be all for fixed income.
Thank you very much, Omar, again. Next, we'll be hearing from our partners at Frontier Africa Reports. Boasen Omofayo. Good morning, Boasen.
Good morning, Josh. I'm sure you can hear me.
Yes, we can hear you.
Yeah, good morning. Thank you very much, and thank you, everyone. I think we have a few grounds to cover. One of the biggest news we've covered so far this week is the IMF World Bank meetings, with a whole lot of stories around the extension of the debt program by the G20, the increase in the package of the special drawing rights of the IMF, which will be agreed by June, and for as a special drawing right for countries, developing countries around the world who are in need of more vaccine procurement and all of that. Quite a whole lot coming through from the weekly meeting, and we'll get a whole lot more on that. The latest $2.3 billion loan that the IMF has given Kenya is still causing a whole lot of upset as the considerations around what will be the implications for this country, the largest economy in East Africa. The story from the market was that the Kenya Stock Exchange is the best performing on the continent year to date, 4% in shillings and in dollar terms, led largely by Safaricom. The problem now in Zambia is between the cement companies and the authorities, which is the consumer protection in terms of Lafarge, Dangote Cement operating in Zambia. They are being fined for anti-competitive trade practices. They've been asked to revert some cement prices there. That is grabbing everybody's attention. Within the Nigeria space, I'm sure we all are aware the story that is breaking as well on the social media and all that between Boa Cement, Dangote, and Flamis over the Boa Sugar Refinery. The authorities are looking into that as well. The news that the central bank has secured a federal high court order to freeze 11 bank accounts which are under investigation, which belongs to about 5 companies, is also under the radar for everyone to think about. So that is also one story everyone is following. EcoBank Transnational named a group executive, Tomisin Fashina, who formerly worked with Steward Bank in Zimbabwe as the group executive operations and technology, and of course is adding that to his previous portfolio. We're in this week getting a number of manufacturing industrial output report from South Africa, contraction 2.1% year-on-year in February, much sharply lower, but still a contraction from 4.2% in January. South Africans are also considering the second loans from BRICS, which is the new development bank formed by the Brazil, Russia, India, China, and South Africa, which was the BRICS initiative. The South Africa is looking for funds, fast and furious, $1 billion they need now to create jobs and tackle COVID-19, just as Nigeria is making an announcement of entering the Eurobond, looking for about $6.14 billion in FX reserves budgetary support. South Africa's GSE is the second best in Africa year to date, 11% in US dollar term, led by resources and mining companies within the continent. Botswana and Namibia are expected to grow 8.7% and 2.6% this year, respectively. That's according to the IMF. The whole latest World Economic Report is still being digested. But Fitch has a report that Egyptian banks face further pressure from virus fallout. What we saw from the earnings from the Egyptian banks over the last couple of weeks was a bit of a dent on their books because of the virus. Again, because Egypt was a major gateway for tourism, hospitality, and leisure for the continent, especially in connection with the Europeans who are coming through that particular country. So the banks had a whole lot to provide for on their books because of the losses within that economy. And on a final note, the Sovereign Fund of Egypt and EFG Hermes are acquiring an AIB, a lot of banking sector, financial services consolidation within the North African corridor, and that has been watched very closely as well. That sums it up for us on this side of Frontier Africa Reports. Everyone, do have a great weekend. Thank you.
Thank you very much, Boatin. We've now come to the Q&A session. If you have a question or you'd like to speak, kindly raise your hand and you'll be allowed to speak. I see Luke has his hand raised, and Luke, you may go ahead and speak.
Thank you very much, Joshua. So my question is for Sheung. So despite the fact that some companies released better than expected FY20 results, we have seen more bearish trading in the stock markets. So I want to get a trader's view on what we should expect in the second quarter. At what point should we expect these sell-offs to pull off, and when should we expect to see more positive trading in the stock markets? Thank you.
Yeah, thank you, Luke, for that question. So speaking to why we're seeing some level of bearish trend, I think if you look at the banks, the ones that are really pulling down that subsector index has been GT Bank and Zenith. And if you look at it, those are the ones that they have paid dividend, and their shareholders have qualified for those dividends. So most times what investors do is to sell afterwards, and which is the trend normally for the market. Once investors qualify, they sell off, and then they probably just wait to see some level of catalyst or indication to when they will come back. So for the likes, the major names that have been pulling the market, like I mentioned, GT and Zenith for the bank, so investors have qualified. For consumer goods, it's been Guinness, and it's just because we've seen some level of profit taking. The stock has moved from the level of about 22 to say 35. So we saw investors taking out profits, and now it's back at about 30 or 29 naira. So that's why we've seen that pull back in the market. When are we seeing investors come back, or what should we be looking at? I think one of the major things for Q2 would be the Q1 results. If once Q1 results start coming out, which will obviously have the what's it called, which you have like the impact of whatever is the macroeconomic conditions in that result. So investors will be able to say, okay, yeah, for 2011, this is what we're expecting based on Q1 results. So to an extent, the ones that maybe outperform or maybe perform just as investor analysts are expected should see some level of should see some level of improvement in their share price. So I think Q1 result will definitely be one of the things we'll be looking at to pull up or for as catalyst for the market for by the end of the month, or for Q2 or through Q1 result will be a major indication. Then again, what would oil price look like as well? Are we going to be seeing will oil price have improved significantly, or are we just going to be seeing it at this level? I believe analysts are saying we should be seeing it at this level up until the end of June. So we probably won't see much in for the price of crude. But if at all there's some shock in terms of unexpected gain, maybe gets to 70 or 75, then we can start seeing that also affect market direction for equities. I think those are the two things I can say we'll look at for in Q2 for market direction. Thank you.
Thank you very much, Joe. If you have any more questions, please feel free to raise your hand or leave a message in the chat box or the Q&A box. And if you are joining us from Facebook, you can leave a comment and we'll get to your question. I think Boasin has his hand raised. Boasin, you can go ahead and speak.
Yes, thank you very much. I was looking at this particular development story between flour mills and Dangote on this issue of pricing and the sugar development. Are there any concerns as at this moment on how the market will react to this tough war between these three major consumer goods companies on the Nigerian Exchange Limited, on the exchange? Thank you.
Thank you for that question, Boatin. I'll hand over to Chima, our consumer goods analyst. Good morning, Chima.
Good morning, Joshua and Basin. Thank you very much, Basin, for your question. So at the moment, we do not exactly expect any reaction from the market. We're currently still seeing as the news develops. So the updates is that Dangote Sugar and flour mills have petitioned the Ministry of Trade to look into the refinery expansion of Boa Sugar in Port Harcourt, saying that it goes against the National Sugar Master Plan in terms of backward integration plan and supporting local sugar production. Because what it is now is that the current refining capacity in Nigeria is around about 3.5 to 4.8 metric tons. And when we consider the consumption capacity for Nigeria is currently at about 1.25 metric tons, which is nowhere near half of what we are able to refine. So adding more refining capacity to your already established refining capacity makes it more likely that you'd be importing more raw sugar rather than focusing on local sugar production. So we are waiting for any updates from the Ministry of Trade. However, we do not see how this would impact their financial statements or their operations, the current operations, because as it is, the dynamics currently still favor the producers in terms of pricing and volumes. So we expect that they would continue to maintain stable operations. When any news comes out, it will just affect majorly, if it turns out negative, it will affect the expansion capacity of Boa Sugar, which will not necessarily affect their current operations and the volumes they're able to roll out in terms of what Nigeria's sugar demand is. So at the moment, we do not expect it to affect sentiments in the market. That's all from me. Thank you, Joshua.
All right, thank you, Chima. We still have some time, so if you have any more questions, you can go ahead and raise your hand. See, Boston has his hand raised. Go ahead, Boston.
Well, I'm sorry, it looks like I have a bit of questions this morning. Yes, the SEC, the Securities and Exchange Commission, has also raised a flag over to investors about those who are doing online trading of investment of list stocks that are not Nigerians. Can our equity analyst speak a bit to this development? Is this what is this development all about that the SEC is warning about? Thank you.
All right. Thank you, Boasin, for the question. I think it was released yesterday when SEC mentioned that there are a couple of platforms that are offering foreign stocks to Nigerians, and the SEC is saying if those platforms are not registered, they won't be able, they won't be able to offer those foreign stocks to Nigeria. And also, the registered capital market operators that are partnering with these firms should stop doing so. On the surface, I think for our market we don't see this affecting in any. That's for the local market. We don't see any impact on the local market. What we just believe is maybe SEC will just need to update their rules around this. Maybe make those what's it called, those technology platforms, bring them under some sort of umbrella to make them register, and to an extent, because at some point in time when there's going to be any challenge, it still falls back on SEC to say, oh, you're actually not doing your investor protection, you're not carrying out your investor protection or supervisory role perfectly, making these people go away, in making these technology platforms owner go away with this. So I think there's just what I believe will happen eventually will be there will be some sort of truce where these platforms will be made to register, and there will be some rules around how they perform. So at least investors will still be able to invest in foreign stocks from Nigeria. But at the moment, we do not see these having any impact on the local market. Thank you.
Thank you very much.
Thank you very much for all your questions. We have now come to the end of today's meeting. Thank you for everyone who joined us today. We hope that you will join us again next week for another edition of the breakfast meeting. Do enjoy the rest of your day and have a great weekend. And do continue to stay safe. Goodbye.